There are two moments in the market that turn brave traders into broken ones. And Jesse Livermore warned us about both. That's how I want to open this story. Because if you've traded long enough, you already know the market doesn't destroy you through price alone. It destroys you through timing, through the moment you choose to act. Or worse, the moment you choose to react. Before we go deeper, comment below which trading moment has hurt you more, acting too early or acting too late. Now, imagine this. The market is quiet, too quiet. You can feel something building underneath it, the way sailors can sense an incoming storm before a single cloud forms. Traders stare at screens, waiting for direction, waiting for conviction, waiting for anyone to make the first move. And just like that, volume spikes. A candle flashes, price jolts. Anxiety wakes up inside your chest. This is where most traders step into danger. This is where the first deadly trading time begins. But before I tell you what it is, let me take you deeper into the psychology. Jesse Livermore mastered better than anyone else the psychology of waiting, the psychology of timing, the psychology of understanding that the market has periods where fortunes are made, and periods where fortunes are taken back with cold, merciless efficiency. Livermore once said, "There is a time to go long, a time to go short, and a time to go fishing." Most traders today only understand the first two. Nobody wants to go fishing. Nobody wants to sit still when screens are flashing, liquidity is pulsing, and the entire internet is preaching urgency. But Livermore understood something our modern world tries to erase. A trader's deadliest enemy is not lack of opportunity. It's the inability to wait for the right one. Let me set the stage. Clearly, this video isn't about indicators. It isn't about strategies. It isn't about setups or leverage or entries. No, this is about the moments, the times of day, the conditions of the market. The psychological tides that turn otherwise disciplined traders into emotional gamblers. Because every trader has experienced it. The market isn't really moving, but you feel like you should be doing something. You open a position you don't truly believe in. You convince yourself it's just scalping. You take a small loss, then another, then another. Soon, you're trying to win back what you never should have risked in now. The market has you wrapped around its finger. Livermore understood this trap more deeply than anyone. He lived it. He documented it. He warned us about it. So today, I'm walking you through the two deadly trading times he believed traders should avoid at all costs. Because each one is a psychological ambush disguised as opportunity. But before we break them down, let's build the emotional landscape. Picture yourself at your desk, charts glowing, coffee half finished. The world outside is quiet, but your mind is loud. You're scanning through time frames, the way Livermore used to scan ticker tape, looking for rhythm, searching for movement, hoping to sense the market's tone. Now here's the truth. Livermore understood. The market doesn't whisper. The market doesn't hint. The market doesn't almost give signs. When it's time to strike, the market speaks with absolute clarity. Anything less is noise. Yet traders lose more money during almost moments than during any trend reversal, breakout failure, or black swan event. Livermore would sit for weeks, sometimes months, waiting for a single moment where the market finally aligned with his read. He didn't fear boredom. He feared action without purpose. That was the most expensive form of trading. Modern traders have the opposite problem. Our greatest fear is missing out, missing the move, missing the candle, missing the opportunity that might never come again. We forget that opportunities repeat, but capital doesn't. So here's where our journey begins. The first deadly trading time isn't dramatic. It isn't explosive. It isn't even obvious. It looks harmless. It feels harmless. But inside it, traders lose more money than during any news event or market crash. And the second deadly time, that one is the opposite. It is dramatic. It is emotional. It is the moment when your heart races faster than your mind can think. When liquidity thins, when spreads widen, when rationality collapses. Livermore feared these two moments more than anything else. He believed avoiding them was more important than mastering any strategy. And in the next section, I'm going to reveal both of these deadly times. Why they're so dangerous, how Livermore personally navigated them, and how modern traders can protect themselves from falling into the same psychological traps. But before we move forward, let me ask you, there are moments when the market feels like a battlefield, but the deadliest wounds are always self-inflicted. That's how I want to open this final section, because to understand Jesse Livermore's warning, you must feel the emotional gravity behind it. You must feel the tension of the two market moments that ruin more traders than any losing streak, any bad strategy, any economic disaster. And now it's time to reveal them. Before we dive in, answer this for yourself and comment below. Which market moment tempts you the most when nothing is happening, or when everything is happening at once? Because that question alone may determine how long you survive in this game. The first deadly time. The silence before the move. The first moment is subtle, deceptive, dangerous, not because of fear, but because of boredom. It's the low volume, low conviction hours when the market drifts sideways like a boat without wind. No rhythm, no direction, no commitment. Livermore called it the no man's land of trading. To him, this period was poison. Most traders don't lose money during big moves. They lose it during quiet markets where they try to force something to happen. They see 2 or 3 tiny candles and convince themselves a breakout is forming. They imagine momentum where none exists. They are not trading the market. They are trading their imagination. Livermore understood this psychological trap better than anyone. He spent years studying the tape, realizing that the market telegraphed its intentions through energy, not through stillness. If volume was thin, if price drifted without character, if candles were choppy or directionless, he avoided it with religious discipline. He knew the truth. In quiet times, you don't see the market. You see your own impatience. And impatience is the birthplace of 90% of trading losses. Ask yourself, how many times have you taken a trade simply because you were tired of waiting? How many times did you lose? Not because your analysis was wrong, but because the market simply wasn't ready. Livermore believed waiting was a trader's greatest weapon, not indicators, not strategies, time. He warned, the big money is not in the buying or the selling, but in the waiting. But waiting is painful. Waiting feels unproductive. Waiting feels like falling behind. And so traders jump into dead markets, dead liquidity, dead setups, and trade themselves into a hole. This is the first deadly time when the market is barely moving. The boredom assassinates discipline, patience collapses, and the trader becomes the prey. But the second deadly time, that one is the opposite. That is the moment of chaos. The second deadly time, the explosion after news. If the first deadly moment is silence, the second is violence. This is the instant right after a sudden news. Event CPI, unemployment data, rate decisions, geopolitical shocks, unexpected corporate announcements when the market whips violently in every direction at once. To a novice, these candles look like opportunity. To Livermore, they were the footsteps of death, because in those moments, liquidity evaporates. Spreads widen like jaws opening. Algorithms hunt stops with surgical precision. Emotions override logic. Your brain makes decisions faster than your discipline can interrupt them. You are not thinking. You are reacting. And Livermore warned that reactive trading is suicide. He believed that news creates fake signals, temporary distortions that look like momentum but are really just volatility spasms. He refused to trade immediately after news because he wanted to see whether the move was real or just emotional noise. To him, the first few minutes after major news were the most dangerous time to be alive in the market. He said, the market is never wrong. Opinions often are, And no opinion is more dangerous than the one formed during excitement. In that moment, traders aren't thinking about risk. They're thinking about opportunity. They're thinking about missing out. They're thinking about catching the big candle. But Livermore understood something timeless. Volatility is not opportunity. Volatility is temptation. And temptation is how traders drain their accounts in seconds. These two deadly times, the silence before the move, and the explosion after the news, are psychological ambushes. They look like opportunity. They feel like opportunity. But they are the moments when the market is most hostile to human emotion. The real reason Livermore avoided these times, it wasn't fear. It wasn't caution. It wasn't laziness. It was this. He understood that trading success is 80%, not losing money. Most traders believe they must trade often to grow. Livermore believed the opposite. He believed survival was more important than action. He believed a trader's longevity defines his wealth. A trader's patience defines his entries. A trader's exits define his emotional discipline. A trader's inactivity defines his maturity. He did not measure himself by how much he made. He measured himself by how little he lost. He avoided these two deadly times because he knew the market behaves irrationally during them in rational markets. Exploit emotional traders. How modern traders can apply this wisdom. Today's markets move faster than Livermore's ever did, but the psychology hasn't changed. Here's how to implement his principles. 1. If the market is quiet, you don't trade. No volume, no conviction, no trade. Sideways action. Step aside. Your goal is clarity, not activity. 2. If major news just hit, you wait. Let algorithms kill each other. Let spreads normalize. Let direction reveal itself. 3. Your job is not to catch the move. Your job is to catch the real move. 4. You do not trade until the market reveals a clear trend. 5. You understand that the best trades take no effort. The worst ones require rushing. 6. You remember Livermore's most powerful rule. Be right. Sit tight. That rule applies not only to staying in a good trade, but also to staying out of a bad market. Imagine yourself months from now, not chasing every candle, not reacting to every spike, not panicking at every news release, but sitting calmly, like Livermore did, waiting for the moment when the market finally aligns with your conviction. Picture that clarity. Picture that discipline. Picture that evolution. The market rewards those who survive long enough to understand it, and that survival depends on avoiding these two deadly times. So let me leave you with this. A trader's greatest edge is knowing when not to trade. If this message hit you deeply, if you've lived one of these deadly moments yourself, comment below with one word: discipline. Because, in the end, discipline is the only weapon that never loses value.